Birthday vibe, birthday mood right now. Birthday mood. Hey, 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 hey. Get scammed, cause then you'll regret it. What's good? What's good? Birthday vibe. Hey. GizzyCredit. Anything you want, then you can get it. Don't get scammed, then you'll regret it. You no longer gotta look at it. Birthday mood. Don't be scammed. Hey. What you need is just a change of plan. Hey. And time is money, you know, get that cash. Get the cash. Just get it fast. You already know. Oh, ciao, Miss Divine Brown. It's my birthday. Celebrating my birthday today. Podcast. You already know. What's good? What's good? Mi gente, mi gente. What is good with you? Thank you so much for logging on. You could be somewhere else, but you decide to be with us today. Thank you. Why is my mouse acting a fool? Okay, boom. Shout out to everyone on YouTube. Shout out to everyone. Hey, David Bradley, thank you, bro. On Facebook. I was a little bit late with the thumbnail. I had to take care of my daughter. And my wife had to take a nap. My wife is, 6 months pregnant now. So, you know, she's taking naps more than usual. So I have to let her take her naps. Anyways, hope all is well. Today is June 29th. Today is actually my birthday. And definitely I am enjoying the day. I enjoyed the whole week. Actually, I went down to Jersey Shore. Thank you. I went down to Jersey Shore all last week, was taking calls and everything all last week. Because, you know, I still got to work. You know, John was handling the emails. I was handling the text messages, making phone calls, people who started credit repair. You know how we do. We never take full days off because we're always on the go. But it was Jersey Shore, Sea Isle City. Very nice area down there, Jersey Shore. 2 hours and 15 minutes. Like 15 minutes from Wildwood, if any of you guys know Wildwood. Anyways, topic today. Oh, how you doing, my new subscribers, my new people? Name is GizzyCredit. We help people here with their credit. If you want to get any type of financing, real estate, credit cards, mortgages, hard money loans. If you're looking to get into real estate investing, matter of fact, today's podcast is going to be, what do you want to do? Real estate or stock market? Many of the real estate investors on my Facebook started doing stock market. You see all their screens together, all their screens, because they want to get into the stock market, but they're still doing real estate as well. But today we're going to talk to John, and John's going to educate us and let us know what is going to be best to do. Glenn Byers, what's good, bro? Happy birthday, Glenn. Yeah, over here enjoying the day. Thank you, T Green. Happy birthday vibes today. Yes, sir. Yes, ma'am. Yes, sir. And put John on the phone right now. Again, I was on vacation. I'm going to get John to show his face next time. What's going on, John?
Hey, what's up?
Good, good, good. Over here. Can everyone hear John? Say what's up, John.
What's up?
How's Florida, John?
I mean, the media is saying I'm not.
Yeah. What's the media? The media here in Jersey is saying that you guys 10,000 new cases of coronavirus, and you over there in Fort Lauderdale, and is whatever to you, right? Like you don't.
Fort Lauderdale's like 20 minutes away, 30 minutes away.
Fort Lauderdale. Oh, West Palm Beach. My bad. West Palm Beach. So all those areas are tourists and a lot of young people. But I don't think you got a lot of young people in your area, right?
I mean, there's. I don't know where the young people scenarios come into play. If that's really the narrative. I mean, this is out of season.
Yeah.
You know, I mean, this is a lot of people. This is just a unique year, given the fact.
What do you mean out of season? It's summer, so why not?
No. Season here in Florida is November to like May. You know, because that's when the weather is like incredible, right? And the weather is terrible up north.
Yes.
So a lot of the people, I mean, most of at least Southeast Florida is largely transient people. You know, people from New York, Philadelphia, Boston,
yes,
or Massachusetts, New Hampshire, Maine, etc. You know, some people from Chicago, but you know, normally it's mostly people up there. So once summer comes, they're normally out. But this year, because of everything that's going on, a lot of people stay down here.
Yes.
So you're getting more concentration of people that would have typically left for the summer, because it gets hot here, man. It gets like insanely hot here in the summer, and humid, like crazy humid. So I don't think it has any. I mean, look, they're saying there's more young people that are being identified as having the virus, but I'm not seeing like a surge of young people down here. I don't. You know, at least that's not what I'm seeing. But I'm also not hanging out with young people, so that may have something to do with it.
Well, John's pretty young. John's 40. I turned 40 today. I still, I still think I'm 30.
Yeah. Well, listen, I guess it's on the frame of mind. Age is just a number. But I mean, I think that, as it applies to like the virus and everything, I think it's crazy to think that what's going on down here is not going to happen in the other areas that just open slower. I think that's insane. You know, I mean, you're talking about, just for instance, just using Jersey as an example. Like I said, when we're up in Philly, which is typically in the summer, when we go to the Jersey Shore like everyone else up there.
Yeah.
That's like packing. You know, I mean, you're packing. Some of those towns are fit for 250,000 people, and they pack 750,000 people in there in a weekend, right?
Well, yeah, that's true. Yes.
You know, you're talking about drinking everywhere. That's all you do at the shore. You know, you drink, you have fun, you get loose. So, just this weekend alone, this past week alone, we had like 8 or 9 clients that were at the Jersey Shore. Just as
I saw some people. I was sharing on Instagram. I had some people like, "Oh, you in Seattle? Me too. I'm over here up northern Seattle," and I was like, "Oh, okay. I guess people love going there."
That's my point. So you say to yourself, I mean, with those kinds of scenarios. I know that they're soapboxing up there in New York right now, and Jersey and PA, etc. But the fact of the matter is, it's inevitable. I mean, it's inevitable when you have people, especially in that kind of situation. So I don't know if you saw today, but Jersey, the governor came out and said he's shutting down
restaurants,
outdoor dining. Yeah, he said
outdoor dining. He just opened them.
Oh, I'm sorry, indoor dining.
About to say, you can't do that to Jersey people, Jay.
Yeah, but look, man, I mean, you guys are a weekend out.
Jay, but this guy, this governor here in New Jersey, he's getting a lot of heat. I mean, are you damned if you don't?
No, for sure. No, without a doubt. I'm just saying that if you watch these guys, I mean, it's ridiculous, because here's the reality, right? The reality is just that it's inevitable. It hasn't been inoculated, right? There's no vaccine for it. There's no way to get rid of it. So whenever there's people that are in close proximity, it's going to spread. It just takes a little while to spread. So the fact of the matter is that we opened up early. Texas opened up early.
Yes.
Arizona opened up early. Maybe a couple weeks earlier, so we're a couple weeks ahead of the curve. But the reality is, you're going to see it up there too. It's inevitable. I mean, they're not passing around an elixir that's getting, that's keeping it away from people. People are down at the shore having fun. People are at the Hamptons having fun. At one point, the mayor of New York was like, if they don't stop fucking off at the Hamptons, he's going to start finding the people up there because nobody's listening to anything. Right? And it's true. It's the same idea. It's not any different. So I mean, I think that the reality is that I just think a lot of people underestimate it, and we're also Americans, right? And we don't like to be told anything. We want to do what we want to do when we want to do it. So the fact that we were all crammed inside for whatever period of time, the minute that door opened up, man, it was like kicked down.
Well, we're gonna be celebrating 4th of July next week. So we're gonna be celebrating our independence indoor.
Yeah, I mean, did they close the beaches there for 4th of July?
No, nothing has said that. No, nothing.
Yeah, well, no, they did that down here. So they closed the beaches for the 4th of July down here.
Yeah, that's big. If you closing Florida beaches for 4th of July, humid ass Florida, like Glenn Byard said, he's in West Palm Beach. I think he's in.
Yeah, he's in West Palm.
Yeah, he's in West Palm, and he's like, it's humid as hell.
No, it's crazy. It's ridiculously humid here in the morning and at night. It's crazy. That's what I'm saying. That's why most people go, you know, if they have the ability to go up north for the summer, because it's just the summer months are really, really, really hot down here. But, you know, like you said, I mean, it's a situation, though, where you're seeing one state that opened up early and what happens.
Mm-hmm.
I mean, there was all kinds of stuff from up north this weekend, just people being out and stuff like that, and footage of people out partying and stuff. They're not wearing masks. Like when you were out, and listen, this is just making a point that
at the beach, I'm not wearing a mask.
It's not like we're not concentrated. It's not like we're concentrated with morons down here in Florida as much as everybody likes to think. The reality of the situation is the same thought process goes on everywhere. You're seeing areas of like Montana, I think, spike. You know, you're seeing all these areas that opened up gradually early, right after, you know, Florida and Arizona and Texas, and they're all gradually starting to catch up because we're all humans. We all exhibit similar behaviors, right? We're all like, when you open up that door to let everybody out wants to flex that muscle, and that muscle happens to be going out, socializing, drinking. The problem is, the worst thing you could ever do with this virus is get drunk because you're compromising your immune system, right? You're hanging out with people, right? So
yes.
You're weakening your immune system while you're getting drunk at the bar, you're getting drunk hanging out, and while you're doing that, your immune system isn't sitting at a 9, it's sitting at like a 6.
That is true. That is true.
So, I mean, I hope that's not what happens, but I think,
here's the thing. When you go to a restaurant, you don't wear the mask. It's actually the waiters who wear the mask.
Is that a statement or a
question? Well, when I go here in Jersey, I could go inside. Everyone else in the outside seating area not wear a mask, and the only people wearing a mask are the servers and the bartenders. So
now you see what I'm saying, though. That's exactly what happens down here. It's no different. Oh, you're not taking any extra precautions up there that's not being taken. I know everybody thinks down here, everybody just walks around like idiots, but that's not the reality of it. I mean, we opened up, and there are people that are reluctant to mask, but when you go into like major stores that wear masks, a lot of the retail places, they want you to wear masks when you go in. Especially more recently over the last couple of weeks, as things started to tick a little bit. But it's like, it's just with a concentration of people, it's inevitable when everybody is not, you know, it's very difficult to have a virus like this out. And then I personally think, and again, you said it earlier, you're damned if you do, you're damned if you don't. I just think they should have graded out, you know, some of these things rather than shutting down the economy, because you build up such a level of demand that it was like people were getting out of jail. You know what I mean? They come out and they're just going nuts. They're just partying, they're having fun, they're trying to just flip off every ridiculous ideology they had before about why they were locked inside, right, wrong, or indifferent.
Yes.
And they're just hitting it on a 10 when in reality a 6 would have been just fine, right? So I just think that's a lot of what's going on now, and I think you're going to see it everywhere. I think you'll see it pick back up. I think as a result, you know, it's going to drag out, you know, everything else that's going on. And I mean, they already announced today, Fannie Mae, the governing body of Fannie Mae and Freddie Mac said for multifamily homes are extending the multifamily investment properties. They're extending the mortgage payment moratorium, so they got another like 6 months into next year where they don't have to pay them, and they're extending the rent moratorium on them as well.
So what does that? I mean, we total socialists right now.
Say that again.
We total socialists right now for the next 6 months.
But we've been for the last 4 months, and the problem is that it doesn't really roll over to the market. The market of some other stuff. I mean, we're literally 10% off the highs, the all-time high on the indexes, by the way. So you look at the indexes, we're only 10% off the highs, and we're sitting in an economy right now where unemployment is ridiculous and going to grow. You know, most, you commercial supermarkets aren't paying their rent because they're using those moratoriums. Most tenants aren't paying their rent because they're using the moratoriums. I mean, nothing's being paid. Most consumers aren't paying their mortgage. Most consumers aren't paying their car. They're not paying their credit cards. I mean, nothing's being, for the majority, a lot of stuff is not being paid. So I don't know how you can have a market that's 10% off the high when nothing's being paid. Imagine if people are paying, what's going to happen? That's why you're seeing all this demand right now. Like, hey, you're seeing these numbers when people ran out of the house and they started buying cars. Like today, the month-over-month house pending home sales went up like a ridiculous percent. Because number one, it was basing it against last month, which was a terrible number. But more importantly, because everybody's rushing out of the house trying to get out in front of it, right?
Yes.
Now, obviously, these things haven't closed yet. They're pending. It just means it's under contract. But still, it's the same idea. What happens at the end of this month? The end of July, when that $600 unemployment stuff stops? What happens at the end of July when, you're dealing in a situation where, potentially, homeowners might have to start paying their mortgages again?
Now,
That's
these
discretionary income that you're extracting from the economy. This is what I've been saying for the last however long, about when you're going to start to really see real estate prices adjust, because when you start extracting that money from the economy, because we're a consumer-driven economy, then what's going to pay for all this stuff? I mean, once they got to start paying their mortgage again, they got to stay paying both of their cars again. They got to pay their credit cards. They got to, you know what I mean?
Yes.
What's going to happen then? Where's that money coming from? Because it's not going to be more jobs. There's not going to be, it's just not going to happen. And I know a lot of people hustle on the side with Uber. They run Uber on the second job. That's not going to happen, right? Most people aren't even riding Ubers. Ubers are running at like 30-40% capacity right now.
Yes.
So if you were doing it as a side hustle, just to make some extra money, I mean, that's not even there anymore.
No.
The majority of it. So it makes it very difficult to really scale out, right? Because, when you're dealing in the stock market as opposed to the real estate market, you're trying to map out 6-12 months in the future, right? That's how it moves. It moves with that kind of guidance built in. But when there's absolutely zero guidance right now, there's no certainty. The idea behind them keep fluffing up the market and pumping money into the system. The whole idea behind that is they're trying to do it long enough to be able to sustain so they get out on the other side, right?
Yes.
With the least amount of damage. The problem is this could go terribly bad, right? You can't just keep forever. You know what? The way it ends, the last bullet that they have in the chamber, well, I mean, they're printing money right now. So for theoretically speaking, the last bullet in the chamber is to do an infrastructure bill, right? And that'll be the point when the market bottoms eventually, right? Is when they come out with the infrastructure bill, because the infrastructure bill, they did it. The depression, effectively, what that does is it puts everybody back to work. The government's paying; they're paying good wage. You can knock down the unemployment, and the government is controlling the payment of these stuff. Do you know what I mean when I say?
Yeah, but with all this stuff about the income, I mean, not the income, where you get paid hourly nationally.
Wage.
The wage, isn't it supposed to go up to $15 an hour, or is it already there?
Oh, I can't imagine. I mean, I believe it was somewhere around there, but I can't imagine that number's going up right now. I don't know who would. I don't know how that would even happen. Listen, there was a guy on today that when I was watching CNBC, he owns like a bunch of shopping centers and some restaurants, high-end stuff in Texas. And he was saying himself, he was like, I don't know how. And the guy runs a restaurant.
Okay.
A number of them. And he was like, I have absolutely no idea how restaurants survive after this.
Whoa.
And that's, I mean, again, we go back to that idea, right? Once you got to start, if you're that restaurant and you're just making do right now, you're getting by with the money you got from the disaster loan,
correct,
from the PPP, which is now coming due again, so you're extracting liquidity from it. A lot of those first tranche of PPP loans, that money's coming due, whether you grant it or not. The money's running out as well. So, I mean, there's money coming out of the system soon, along with the unemployment money, along with this other stuff. And you're sitting there saying to yourself, how long can you prop it up for, right? If this keeps dragging out and cases continue, you just because people, I mean, I heard somebody say today, the fatality rate is going down. Well, I mean, that doesn't motivate people to leave the house, right? just because the fatality rate goes from 4% down to 2.8%, meaning 1%, it goes down 1%. That's not going to motivate the 60-year-old guy to go out, right? It's not even going to motivate the 50-year-old guy to want to go out just because there's 1% less on that. You know, you just don't want to run the risk. We're in a risk-averse like psychology right now. So why would that rate going down somehow make people more interested in going out? I just don't. Maybe over the course of time, when they have a solution and some kind of a vaccine, maybe that makes sense. I don't know how that makes sense in regards to right now in the moment as these cases spike and things get like just completely out of hand, like they've gotten. I mean, Florida's gotten insane. I mean, I don't even know. I mean, look, here's the one thing I can tell you specifically about Florida. I'm sure Glenn can say the same thing. There's testing sites everywhere.
Okay.
I mean, they're everywhere down here. They were when I left to go back to Philly at the end of May. There was like none, and when we got back, the end of the first week of June, they were making a real collective move to get a ton of testing sites. So I'm sure that has something. I'm not saying it's not spreading. I'm saying that I'm sure that has had something to do with the take up to this extreme. Because I mean, to think over the course, because I get sent the numbers.
Okay.
Of the case count that comes through here, and over the since the 6th of June to date, I mean the numbers have doubled and tripled and quadrupled.
Wow.
I mean it's insane. But here's the thing, though, which is ironic: the hospital, the people that were sent to the hospital as a result, and the people that passed away the day over day is exactly the same as it was in May. That's crazy, right?
Yeah.
That's crazy to think. That
so same amount of people are dying, the same amount of people in May, but more people are contracting it.
Actually, yes. Actually, going back to the end of April, I ran I ran this formula going back to the end of April, right around my birthday, and to present, right? And the case count, the case count was almost identical, give or take, from April 23rd to June 2nd. When they started implementing the testing, it took off on the case count, right? But the actual day-over-day hospital increases and day-over-day, people that passed away as a result stayed exactly the same to date. Now, that could also be because people haven't been admitted because they're just now realizing. I don't know, but I just thought that was really weird going into Friday when I saw it. And then over the weekend, there was another 15,000 or some ridiculous number worth of cases that originated. So I don't know. The point I'm trying to make, though, is just the fact that it's inevitable. It's going to happen to every place that opens up. That's why you're seeing them roll back in areas that don't have a tick up yet, right? That's why you're seeing the guy in Jersey, cut out in dining in a restaurant, right? You're starting to see them scale. He was on TV last week saying they're going to start school in September, and I'm thinking, dude, you're talking way too aggressive. How are you talking about sending kids back to school, right? How can you send kids back to school when there's just such an insane level of uncertainty? There's no definitives in this entire situation. None.
Correct.
Think about that, though. Think about that. For one time, I mean, I'm 40, you're 40. A lot of people that are listening to us are probably our age or older, maybe a little bit younger.
Correct.
The fact of the matter, we grew up in an environment where almost everything was certain around us, right? Maybe not our exact lives, but the things that we looked at as pillars were certain, right?
Yes.
Other than a little bit of deviation. We could go out if we wanted to. We had our independence in that way, right?
Yes.
Our health wasn't good, for the most part. We didn't have to worry about any health-related issues. The economy was open, right? Functional. Our economy wasn't being propped up by the Federal Reserve, whose job is. I mean, there's just such a heightened level of uncertainty that exists right now, and there's no end in sight because as this thing continues to languish, I mean, I don't think people are going to be hustling to go out because Florida, if the media wants to use Florida as a scapegoat or Texas as a scapegoat, look what happens when you just run out of your house and go have fun, right?
Yes.
You turn around, you get sick, and you got to go back in your house.
For 2 weeks.
For at least, right? But think about that, though. So let's just say that a lot of the other states have learned from whatever is being pushed about what Florida and Texas and Arizona's done, right? By just rushing out and going, having fun and everything. And you say to yourself, okay, well, maybe some of these other states, they're going to catch it and it's going to spread a little bit again. But maybe it's not as bad as Florida's case count, right? Or maybe it is. I don't know. But the point I'm trying to make, though, is if you say it to you, what do you think that does for the economy?
Oof.
You know, it was one thing when we
and
were shut
states
down,
that are run
people were
by
going out,
by
people were
tourists.
spending. But now you're in a situation where you're back open and these people don't want to go out.
Oof.
What happens there? That's what I'm saying. That's why nobody's buying real estate. No investors are buying real estate right now unless you're getting a great deal, because tenants aren't forced to pay rent. You can't throw them out. You're not getting any good deals because the market is so tippy top right now. It is still frothing right now, right? I mean, you may be down 10%, but in the grand scheme of things, you should be down a lot more than that by now, right? Just based on speculation. So, I mean, it's crazy to think, like, at some point in time, if it's not able to be rode out, where there's something's going to have to give. Because they're talking about not getting a vaccine till, in an ideal situation, sometime early next year, right?
Correct.
So it's in an ideal situation, in a very ideal situation, more than likely sometime mid next year. How do you, I mean,
Here's the thing, though. I went, you know, a little getaway, Seattle City, that area, and I was seeing, you know, new construction being built, you know, no problem, people working. And, you know, my wife was asking, or someone that lives around there, $800,000 homes. And then if you are on the beach itself, that building overlooking, it costs $5 million for the houses right there.
Right. No, and I'm very familiar with Seattle. I know where you're at. So the reality, though, is everything's expensive there because it costs. The land that they're buying is expensive. You understand what I mean?
Yes.
So they're not pushing it up because they're trying to be greedy pigs. They're pushing it up because that was the number that they wanted that they need to get in order to make the return that they're trying to get. On top of it, a lot of these construction shovel-ready projects you're looking at right now, they were already started probably before this all started.
Yes.
And they're paying on that money. That money's costing them money, so they got to finish it no matter what. Plus, you got to figure if you're a new construction builder, right? I'm not talking Toll and Lennar and stuff that are publicly traded, and you know they can wash things out, raise money however they want. If you're like a small to mid developer, where you do, reasonable amount of developments a year, you got to be shitting a brick, right? I mean, you got to be shitting your pants if you think about it, especially if you're on the high end, because you got to always think as an investor, what's your worst case scenario? Right? What's your worst case scenario? Any investment I ever do, I map out the worst case scenario. What's my worst case scenario, right?
Have you ever gotten into the high end market? You know, $3 million, $2 million homes. I know in Florida, I mean, you see Vanilla Ice with his show. He's selling, you know, 800 to 1.3.
$100 million houses. They're not. There's 50, 60, 70, $80 million houses.
Wow.
I mean, it's on a totally different. Granted, as you push more west, that number gets less, but
yes.
still, it's on a totally different echelon here. But the fact of the matter is that, like anywhere though, on the high end, when you're getting, they don't ever detail how much of these home sales are in the FHA range, right? Because the FHA range is the low-hanging fruit right now, just like it was in the crash of 07, 08, 09, whatever, right?
Yes.
That was low-hanging fruit. That kept the mortgage problem. That's kept the real estate market afloat. That's that trace demand that you can always find in any kind of market. You find it in the real estate market. I don't know what investor stuff's doing right now. I just know that from being pragmatic the way I am, I don't know how somebody could walk into this and somehow the pros outweigh the cons, right? If you're doing a 3-house townhouse development unit in Seattle and it's costing you, let's just say between the land and everything else, $3-4 million, and you're selling them at, or let's say it's costing you $2 million, and you're selling them at $800 a pop, and there's 3 of them, and you're making just $300,000 in an ideal situation, which represents roughly about, a 20% return, which is normally what developers in a lot of cases target because it's just the market's so high right now. You say to yourself, what's your worst case scenario? Your worst case scenario is you lose everything.
Whoa.
Best case scenario, you make 15%. Fuck, man. There's places, you can make 15% in the stock market in 3 days, not 2 years it took you to pump all that money in the sweat and tears. So you ask yourself, what makes the most sense right now, investing-wise, right? You get nothing from bonds. Real estate is dead wood right now. Right? Because nothing's pulled back enough to be able to get into it. When it does, it will be a beautiful thing. Because hopefully by that time, everything will be sorted out with, tenants and people paying. I don't know how that gets reinserted into people's budgets, but that's a different story. And then work your way down the other investment classes. There's just not a lot to invest in right now as a result of all this manufacturing of the economy. This is what happens when the economy is basically being manufactured, which is effectively what's going on right now.
With the pumping of the money.
With pumping, just everything's being manufactured. Everything is being manufactured. Think about it. If you just stop for a second, look at commercial real estate. None of them guys are paying their fucking bills.
No.
Then look at multifamily real estate. Most of those guys aren't paying their mortgages. That means the bank's not getting that money. The tenants aren't paying their rent. I mean, we're as close to a socialist environment as you could possibly get into. Now, there's people that are obviously paying their rent, paying their mortgage, because they can, right?
Correct.
But
yes.
the ones that these gigantic pillars and these commercial mortgage-backed securities, which a lot of these large commercial developments are part of, I mean, they're not getting paid. They're all getting everything is getting propped up. There was a release yesterday of the Fed said that they were going to start buying individual bonds, okay, to prop up companies, individual company bonds. Okay, so if you're some kind of a company, for instance, for argument's sake, like Chesapeake years ago was a huge oil company, just filed for bankruptcy.
Wow.
Yesterday, and let's just say the Fed came out and said companies like that, we're going to buy the bonds propped up, right? So we'll be holding it if they run into a problem, which doesn't put more pressure on them, right? Instead, they released a list of the stuff that the Fed bought. They bought Walmart, they bought AT&T. They're buying all these companies that don't need their bonds bought. Their bonds, the spreads on those bonds are so tight, you couldn't fit a needle in there. So it doesn't make, none of it makes any sense, but it's getting propped up everywhere. Everywhere it's getting propped up. So then you say to yourself, can you get out of this? Can you get out of it? Because how do you get out? If you're the Fed, how do you exit it? Without there being some kind of a surplus of jobs, right? Because the surplus of jobs generates money, real legitimate earned money, right? Not manufactured money, not propping up, not vacating payments, not doing any of this bullshit. Like legitimate, jobs for people, and that's why I said the end game is the infrastructure bill, because this way, that's how they'll segue out of it. That's the only way. When they come with that infrastructure bill, no, that's one of the last bullets they got, because that's going to be an insane amount of money. Obviously, all our roads need to be done in this country anyway. They haven't been done since the 40s, so it's something that's absolutely imperative. But when you hear that get announced, just know that the situation is either much worse than you anticipated if it's not bad at that point, or it's going to be the bottom, because at that point then it's going to start taking a different approach.
So it has to get worse first before it gets better. So that's your worst is that.
But my personal opinion, because I look at all the different angles of this stuff, right? I'm not some guy that just buys stocks,
correct,
holds my breath and wakes up in the morning and does the high knees around my living room because I guessed and got it right. I understand all this stuff, as you can see. So the point I'm trying to make though is that none of it is certain. In a normal environment with maximum uncertainty, the VIX is going through the roof. The market's getting railroaded, right? But the only thing that everybody loves right now is that the Fed's involved, right?
Yes.
So that's why the market's being propped up, because the Federal Reserve is buying everything. They're propping up everything. They're doing this. But my question is, how do they get out? How do we get back to a normal economy? And I think, especially considering the fact that this is lasting longer than they anticipate, and if they come and determine that this could run easy into early next year before things start to stabilize, that means they may be in it till early next year, maybe longer, right? And you say to yourself, well, then how do we ever get back to normal? Or what is normal? Because we as human beings, we're always trying to normalize things, right?
Yes.
Always. We're always trying to normalize things because we're routine, we're human beings that are very routine, right? So we always try to normalize it. And you say to yourself, I feel like we've already normalized this, that people aren't paying their mortgages, people aren't paying their rent, people can get thrown out of their houses, right? Because nobody's being harmed in those situations. So the tenants don't get thrown out because the landlord's not being harmed. But if you think about it, there's real money being lost though, right? Because if you're a landlord, let's just say on a commercial property, you make a couple $100,000 a month, on that commercial property, well, you're not getting that couple $100,000 a month. So who's paying for that?
Yes.
The banks aren't making the interest on the loans that they're giving. So, there's a real denominator that's just being extracted, and it's being assumed by the Fed. And so you say to yourself, how on earth does this, how do you get back? How do you go backwards? Meaning, how do you extract them from the conversation? I don't know if you can. See, when the market collapsed in 2007, 2008, they did the quantitative easing and stuff. They went and bought bonds to bulk up the market, right? But they weren't doing anywhere near. It was nowhere near this. It wasn't even on the same conversation as this. And then they started exiting it years later. The problem is their insertion into the economy at that time, although it was revolutionary because they hadn't had to do that before, so it was thought of as being big. It was a peanut compared to what's going on right now. Right? And it was looked at that time like, whoa, man. And they kind of marked the bottom when they came in and said they were going to start buying. Problem is now, he's coming out every week and saying he's buying more and more stuff. Well, what happens if ultimately it keeps getting worse and that's not propping up the market? They're in a pretty bad position then, right? The market starts giving up on the fact that this is going to turn around, and you start seeing this thing dump out. They're running out of bullets. You hear them talk about it. He just released it in the Fed. Chief just released a statement. He's going to have a meeting tomorrow, and in it, he keeps harping on it. I don't think anybody listens to him. It's just the extraordinary amount of uncertainty that's just existing in our market right now, and there's no way to forecast it. That's our entire job, is to forecast our economy, right?
Correct. Yes.
Be out in front of risks so that we don't have some kind of an economic meltdown. Now, obviously, we're in some kind of an economic meltdown, broadly speaking, right, from Main Street all the way to, in a lot of cases, Wall Street. And I just don't understand the lackadaisical thinking that goes on, though, in our broader economy, that the market is sitting where it is. There's just not more being done to figure out ways to get them out of it, right? People are comfortable with the idea they're getting an extra $600 for unemployment. People are happy with the idea that
some people, their argument is either they go back to work and risk getting COVID, or
it's a completely valid comment, isn't it? It's a completely valid statement, right? I mean, it really is. It's a completely valid statement.
Or stay home, make extra $600, make more money than you were getting when you were working.
Well, first of all, the 600 is dying. They realized after they did it that it was decentralizing people, so that they're done with that in July. That's not coming back. So the minute that happens, then you're going to see people back in the workforce, right? Because they're going to have to figure out a way to make up for the money that you were just giving after they weren't paying the mortgages, weren't doing anything, but they were getting extra $600.
You got to do something. I mean, I just got a question right now from someone on Facebook about that.
About what?
About them having to get another job that wasn't paying, what he was used to getting paid. He got to do something.
That's what I'm saying, though. See, that's one small example, right? That's why I'm saying, like, is this stuff really helping? Is all this buffering that they're trying to do, effectively sliding us into social scenario, really helping the people that were paycheck to paycheck, right? Are you really helping them? Because literally all you're doing is just confusing their finances even further than it may have been confused before, right? Yes. So now you gave them an extra $600. You told them, listen, dude, don't pay your rent, don't pay your cars, don't pay your credit cards. So now these people have more money than they had last 3 years, right? Because they were living paycheck to paycheck. Now they just got a check for $1,200 from the government. They don't have to pay their rent. They don't pay any of their cars for the next couple, for the last 2 or 3 months. They now have a savings account, right? And they're saving money, right? More than likely, because they can't get out in some areas of this country. Now you're going to wake up in August 1st and you'll be like, look, you're not getting any. The unemployment you're getting is going to pale in comparison. You got to get up and get a job, right? And they're going to be like, I don't want to leave my house, right? And that's what I'm saying. Like, how do you reinsert that in somebody's mind after 5 months, 4 months of literally peppering their ass? Like, how do you do that? And that's not just the people who live paycheck to paycheck. That's commercial mortgage developers and just everybody that's getting carried right now. Like, how do you extract them? Like, I'm telling you, just when they reintroduce the mortgage payment for the primary mortgage, that's going to cause a huge problem, right? Think about it. You live in I think the average house in our country sells like $350,000 or something. Okay. So let's just say at a prime rate, that mortgage payment is somewhere around $1,800 to $2,000. The last 3 months, a lot of people in this country weren't paying that. That's $6 or $7 grand, right? That they've been just learning how to live around for the last 3 months. And then you wake up the next day, August 1st, you're like, look, man, you're not getting that anymore. Pay me. And they're like, well, I'm not going back to work. Because, my employer doesn't want to, or I don't feel safe or something like this. Like, well, that's fine, man, but you got paid. Right? How long does that $6 grand? Because, they spent it, some of it, a majority of it. So how long does that $6 grand last? right? You got to ask these questions. You got to be able to needle down to the center of it and say, well, how do we get out of this? How do we get back to like the economy we knew in January? And the answer is we don't. But how do we get close to that? And I don't think there is an answer for that right now because there's no clarity. Because there can be no clarity because there's no solution to this virus, and we're going in reverse right now. So I mean, you look at somebody like Los Angeles. Los Angeles didn't even open early, right?
Correct.
It didn't even open early, and they're shutting down now.
Well, there's a big argument about, social distancing or wear a mask. And some people think it's a conspiracy. And some people think that, no, I'm not going to wear a mask because it could kill me more or whatever. Like, it's crazy. You might as well just wear the mask, practice social distancing, and call it a day. Do you wear a mask when you go?
But you know where that lands, right? You know where that lands, back in your living room, not leaving your house. If you can't find a happy balance, and I'm only speaking economically right now, right? I'm trying to paint a very broad picture economically. But you say to yourself, like, if we're a consumer-driven economy, again, this isn't the industrial era. We are a consumer-driven economy.
Yes.
60% of our economy is generated from the consumer.
Services.
So if you say to yourself that consumer is like, man, I'm not going out. Fuck it. I'm not going out. I'm not doing any of this stuff. I'm not exposing myself, because a lot of people think like that.
Yes.
Tons of people think like that, right? I know there's some that, like I was describing earlier, there's a large percentage that are like, I just need to get out, right? And then you hear it's ticking up, and they're like, "Oop, back in my closet, right? I'm done. I'm not messing around with this. I'm going back in. I don't want to give it, right?" But how does that equate to dollars for Main Street? How does that equate to dollars for Wall Street? If you're not Walmart or Target,
yes, or Amazon,
Kroger's, you know what I mean? Like stuff that people are going to.
Supermarkets.
Amazon, Kroger, Amazon,
ShopRite,
staples, Nike, Starbucks, obviously. Starbucks is getting hammered anyway. Dunkin' Donuts. Starbucks did a $3 billion write-down a month ago.
Whoa.
They did a $3 billion write-down before their earnings even came in. They had to readjust their earnings to tell people that they expected to be off by $3 billion on what they had guided. That's Starbucks.
That's crazy.
They sell coffee. Right? I mean, they're in people's living rooms every single morning. I mean, you're talking about coffee, right? So it's like when you hear them do a $3 billion write-down, you're saying to yourself, wow, right? Nike had horrific earnings last week. Nike.
Well, they said that their earnings were the highest like a month and a half ago. That they're the highest ever.
They don't do earnings monthly. They do quarterly, and It wasn't the highest last quarter. It wasn't. And honestly, the expectations, the earnings, the analyst expectations were already diluted exponentially, right? Which was the problem, which is why it was such an eye-opener. Now the CEO comes out and says, "Oh, well, we expect it to be great going forward." But what do you expect him to say? He knows his stock is getting tanked. After hours, it was down like $8. Right? He can't come out and be like, well, look, we expect additional headwinds. Not going to happen. Not going to say that. Right? So then you say to yourself...
Nobody's buying $150 sneakers right now. Only if it's like your birthday or something, you're going to splurge.
No, I'm telling you, man. I'm telling you. Even with that, there's... Part of the reason why I like doing these podcasts is because it's necessary to educate, because the financial literacy in our country is not exponential, right? It's not great. We don't teach it anywhere. There's nowhere to learn it properly, right? There's not a class you can go take where you're going to get the right info, where somebody's not trying to shiest you out, right?
Correct.
And the fact of the matter is that as a result, a lot of these people took their stimulus checks or the money that they're saving, they're spending it on bullshit. Not saving it.
Correct.
And as a result of that, you're dealing with a situation which makes August 1st all the more problematic, right? Because the preparation from a large part of our population, which you would hope would have saved, unfortunately didn't and isn't. So that's why I'm saying, like, how do you, they are in my opinion, we are in an economic checkmate right now that we got to figure out a way to get out of. And I don't know how it happens. Comfortably. Now, that's not to say there aren't opportunities, but when you see stuff like, even in the market today, I know Friday was down broadly, right, because of the coronavirus, spike going up. But then you look at the fact that today the news going around was the fact that the death rate's going down. So bye. It's like, just because the death rate's going doesn't mean people aren't going to stay inside. They don't want to get it. They just don't want to get it. So, I mean, if you're talking about dollars and cents and you say to yourself, well, if the case count's going up, that's going to be less people that want to go out and buy. There's already a large majority that are on unemployment. The more people that go around and buy, the more businesses are going to go out, which is going to raise unemployment. I mean, if you really start putting the thoughts together, you see yourself, you end in a not a comfortable situation as a broad economy, right?
Yes.
So it's like you start to ask yourself, is the reason that the market is looking the way the market is because there's just nowhere else to go, right? From an investment perspective. Because like I said, I mean, who wants to go and buy an apartment building right now when nobody's paying the rent? Oof. At market value, right? At market value. Like, nobody's going to do that.
Only if you have to get into it, you would do it. Like if you have a baby and you need a bigger space.
No. But that's not an investment. But yes, if like I said in the last podcast, there's always an element of demand that exists in any market, right? People that need to relocate, people that had a baby need to upsize for any number of reasons. That always exists, right? And in those situations, most of the time, people just don't care because they just want to get from point A to point B. But I'm talking broadly, though, right? Like broadly, from a broad spectrum. Like how on earth do you find certainty in this kind of a situation?
Yes.
Right. I don't know the answer to that, honestly. And you say to yourself, well, part of the thing that was if you go back to some of our podcasts early on, is that the objective, and we're still on that timetable I gave early on. I don't see it any different. But the longer that they prop this up, the harder it's going to be when they stop propping it up, if they can even figure out a way to get themselves out, right? But I mean, if you see, with that in mind, the banks aren't being any more aggressive lending, right? So think about some of these variables. The banks aren't lending as much. They've contracted with the economy, and because they're trying to avoid risk. They just got denied. They're not allowed to pay out dividends anymore, right? They basically got stopped today. All the major banks can't pay dividends out anymore because they want them to capitalize because of what the Fed is anticipating is going to happen to the broader economy, and they want them to be able to sustain losses that they haven't sustained yet because people haven't been paying the bills because of getting moratoriums. Do you see how some of these things happen, but the media doesn't cover it?
Yes.
You know what I mean? Like, there was a huge thing today. The media covered that the Fed came out, they did the stress test, and they said, you guys can't do dividends. And then you had a representative come out today who elaborated on it, said, listen, JP Morgan, for instance, which is the biggest bank in our country, for the last year and a half, they haven't made enough in free cash flow to pay the dividends. So what they've been doing is they've been going into savings to pay the dividends out. It's the biggest bank in our country. Okay, so they said, you're not getting that money back, so we're not going to let you keep paying dividends if you're not producing enough income to pay the dividend, right? Rather than just keep the shareholder base propped up. So they said, we're gonna have you build up your base so that in the event, which basically means that they're anticipating that there's going to be sustained losses going forward, you're going to have that available cash as capitalization if you need to utilize it, right? Rather than paying out dividends on a quarterly basis to your investors, you're going to start to put it on your balance sheet so you don't have to get carried by the Fed. The Fed's doing a lot of things in the background right now to try and prep for this. It's just nobody's listening.
But this is not to keep Trump propped up. This is just to keep 365 million propped up.
The one thing that I think that Trump did, one of the things that I think that he did exceptionally well is he hired good people around him, right? Mnuchin, I think, has done a good job as a Treasury Secretary. I think he's done everything he possibly can in order to try and keep this market propped up. He's done everything he can to try and keep the market happy, right?
Yes.
Which is important because people vote with their wallets. So do I think that he's doing these things, meaning the Fed chief, in an effort to keep Trump in? If he was, he wouldn't cut the dividend on the banks. I can tell you that much. If you were trying to make Trump happy, you'd be business as usual. If you're trying to make Trump happy, you'd be at negative interest rates right now, right? Because he's been calling for negative interest rates for 6-7 months, right? You would be doing everything you can to endlessly pump money into the system, and you would basically be talking up the economy every opportunity you had, so nobody thinks anything of it. The problem is the Fed's been doing the opposite. They've been talking the economy down, so people can come back to reality because they see that the stock market is not coming back to reality. being 10% off the all-time highs on the indexes, when we're literally sitting in an economy right now where almost half the people are on unemployment, some ridiculous number like that, half the businesses aren't even open, is insane. It's an insane thought, right? So they're trying to walk it down rather than try and bolster it back up. So no, I don't think that's the case. And I don't, look, in most cases, the Fed's supposed to be, and I know it's politics, so it's not always the case, but I mean, they're supposed to be nonpartisan, right? So, but I don't think any of these actions would denote favoring anybody. And honestly, like I said before, they're not in a position where they can just step back right now and be like, you know, we're just going to be quiet and not do anything. I mean, I think they're probably resting with the idea that they got to figure out a way to get out of this too. And if things don't improve and this virus lingers, they understand that, I mean, they understand the consumer. They know that the consumer's not going to turn around and just run out of the house if this stuff spikes back up again. And they can't shut the economy down again. So what's the happy medium? And where does that sit when you're dealing with businesses that were only open at 50% capacity and are cutting back to 30% capacity? I mean, think about all these things. Like how
and now you're not even opening up. You're not even opening the inside of your business.
But that's what I'm saying. Before they were trying to get to 50% capacity. Now you cut back to 30%, right? And they're cutting out alcohol. You can't sell alcohol anymore because of the reasons I explained earlier. When you're drinking, you know, obviously your immune system is compromised. So
but wait a minute. Over here in Jersey, I mean, that's one of the big tax. You know, all the liquor stores are essential business.
No. I'm not talking about liquor stores. I'm talking about when you're at a restaurant. You go out to eat. You go to a bar. They're not letting them serve alcohol anymore. So I don't know about Jersey, but I can tell you Texas, Florida, Arizona, all of them, LA. That's it. You can't go out and eat. You can't get a drink at the restaurant. You can't get a drink at the bar.
Is it BYOB? It has to be BYOB.
No, you can. Because number one, most places aren't BYOB, but number two, like they're not letting you do it for the reason I'm explaining. So you're effectively putting all these guardrails on the economy. How do you expect a restaurant to work?
Wow.
That's how a restaurant makes their money.
Yes.
They don't make it on the food. They make a large majority of their income off the drinks, right? They buy a bottle for $10. They sell all the drinks through it for $100. That's where they make their margin. They get railroaded on food. They railroad on all the other stuff, right?
Yes.
So I mean, again,
even a pizzeria suffers.
Well, you know, I mean, if it depends what kind of pizzeria. If it's just like a delivery one, probably not, because people are indoors, right? You're sitting in. Same with Chinese food. You're sitting in. You're not wanting to leave your house. You order food. Who delivers?
Yeah.
Right?
Those places are making money. You use them all the time when you order. When you order online, Grubhub, something like that. The other one.
Oh, DoorDash.
Seamstream, something like that.
Yeah.
Those people are
DoorDash,
making money.
Yeah, they're. I mean, look, the problem with that business model is they make like $2 a sale, though. So I mean, you got to do like 1 billion transactions. They're just trying to capture market, you know. But yes, that would be something that would make sense. The problem is like you said before. I mean, they don't make that much on those actual transactions, right? It's great that they're capturing market for Uber. That's huge because they're already a big company. But for DoorDash and Grubhub, which just got bought, you know, it's just not the tremendous amount of economic opportunities. So I think you know, I think the next 6 months or so, I mean, it's very difficult to look at equities right now and be like, man, there's some great deals, because there's not. If you look at the broader picture, I mean, there's some stocks that are completely unaffected by it, but then you look at some pillars in our society, like Microsoft, right?
Yes.
Microsoft announced last week they're closing like all their schools and some of their retail operations.
I never thought that Microsoft had retail. I thought you just, you know, you go on Microsoft.com and then boom.
It's got to be out in the Northwest. Is my guess. You know, I don't. You know, that's obviously where they're headquartered. That's where they're from. So I assume that's where it's at. But I mean, Philadelphia has a Microsoft school. I mean, I know that they got a school in Philly. It's like a technology school. I mean, I know they got their schools everywhere. They closed their schools. But I'm saying, like, you're seeing these big companies get out in front of this stuff, right? If they're not anticipating a pullback, why would they spend that kind of money?
Yes.
Why would they waste that kind of money, right? trust me, they're not shooting themselves in the foot. I mean, I'm just, it's crazy to think about how, when you see stuff like this and you see like the market propped up, there's gonna be something it's like when it's like back in '08 when you had all these people blowing the whistle on the mortgage-backed securities, and the fact that
subprime mortgages, all that stuff.
The subprime mortgages and people weren't paying, and there was people blowing the whistle for 6 months everywhere. Market was like, "F you, F you, we're going higher. F you, we're going higher." Then New Century blew up, just the biggest subprime lender.
Yes.
And that made the market up some insane amount, and it did. So when they get punched in the face, right? And then it's like, oh shit, what have I been looking at for the last 3 months? What have I been looking at? Why have I been ignoring this for the last 6 months, right?
Yes.
So I mean, that's the moment I'm at right now, because I'm looking at the situation. And look, I've always been relatively bearish since I've on our podcast, but only from a place of being pragmatic, because I don't. There's a reason that the Fed keeps coming out and saying, there's extreme amounts of uncertainty. Because there's no certainty anywhere. Economically, there's no certainty in our broader economy anywhere. In areas that you would normally run for safety would be real estate, right?
Yes.
In a normal functional market, if you have capital that you have to deploy, the areas that you run for safety would be, obviously T-bills. Obviously real estate is a nice flight to safety. Just because of the limited amount of volatility that now we've become a society where your rush to invest is in the market. So you take money that has to go to work and you have to put it in the market, which is the highest amount of volatility of any investment that any investment class there is.
If you don't know what you're doing, you lose it.
Volatile market. So we're in a volatile market, and you got people. This is why Robinhood is going through the roof.
Well, my brother-in-law had a Robinhood account, and they hacked it. And he almost lost all his money. He finally got access to get in. But everyone is there. So you got to be careful even when you invest in there with your login info.
That's not normal though, right? Like if you're with like a normal broker like TD or Vanguard or something that's like normal. I mean, I don't know what's going on with Robinhood. There's always something new every 30 minutes.
There's something new, yeah.
If you're with like a normal broker, that's not stuff you deal with.
That's
ever. By the way, ever.
What's the big deal of Robin? Do you know what's the big deal with Robinhood versus the other ones?
They don't charge fees, but what people don't understand is they build a spread in, right? So when you there's two ways that you can. Now we just switched as as a country. TD got bought by Morgan Stanley, somebody I forget, but TD Ameritrade and E-Trade, they got bought by somebody too. I forget who it is. But the fact of the matter was, before they were charging commission for every trade. So you'd have a front end and a back end. All you did, you'd have a fee for buying and selling stock, etc. Well, Robinhood's thing was, we're not going to charge you fees. Well, then you say, are they making money, right? If you're not going to charge fees, then make money.
Correct.
Because that's how they make money, right? So then you dig in deeper and you see that. So with any stock, right? Let's just say Starbucks, for instance. I'm staring at their chart as we're on the phone, and the bid ask, meaning what somebody's willing to buy at and what somebody wants to sell at, is right now 73.56 to 73.69. Meaning the bid, somebody's willing to buy at 73.56, somebody's asking 73.69. So that means a wide spread, right? That means there's a wide spread. Normally speaking, the bid would be like on a bid stock this big 73.56, and the ask would be like 73.57, right? But what Robinhood does is they build a spread in there. So when you're placing that trade, there might be slippage. You might see the ask at 73.58, and you get filled at 78.60 because they built 2 basis points in to make profit on that. Does that make sense?
Yes.
So they're blindly charging, right? You just don't realize it because it doesn't come in the form of a commission.
Yes.
Who knows how they book it, but it comes in a different form of a fee, which is why everybody loves them. Like investors, because they're looked at like they're this free site. Well, how do you guys think they're in business? You can't be a broker and not charge a fee somewhere to make money, right? So I mean, there's got to be fees at some point. And Robinhood's system is so basic and so ordinary that you'd have to figure there'd have to be some kind of a hidden fee somewhere, and that's where it is. And the people, their bread and butter client is people people that are just new to investing, so they don't know any better. They don't even understand what I just said, right? So how are they going to ask the right question to know how they're getting charged if they don't even know what I'm talking about, right?
Oh, those are the first people that will tell anyone, you got to get into this. You got to get into the stock market ASAP, or get a Robinhood account. Those are the first people to say that.
I don't know why anybody would say get a Robinhood account. Their charting software sucks. You know, they're so limited in so many different capacities. It's ridiculous. But I mean, teachers don't. I just think it's become a fad, right? So, you know, like everything else, the herd follows the herd. As a result, it's where you stand. But I just think that, for all intents and purposes, I when you see stuff like that, though, and you ask yourself, why are there guys? You know, it's a very reckless environment right now. You know, when you see like uber recklessness in the stock market, it normally is a precursor, right? Like it's normally a precursor to a pretty big move, and typically not to the upside.
Well, still people getting some gains. I mean, because you could short the stock and make money.
You absolutely can short, but the problem is nobody's shorting. You get those flows, man. Like those flows are public. They're available publicly. Like you can see where the flows are at. You can see where the flows on Robinhood are. Like some ridiculous amount of the flows on Robinhood are long. It's like insanely long. Like every day there's a down day. It's like buy the dip every 30 seconds. This is why the media covers Robinhood, right? That's why you see all these stories about Robinhood all the time. Because the mainstream media, whether it be CNBC or Bloomberg or any of the other ones, they follow it because they know who the demographic is, right? And when you start seeing the demographic, you know, meaning like new traders or young traders or inexperienced traders, you know, when you start seeing that pump money into the buy side, then they know it's time to sell. Does that make sense?
Did you hear the story about the 17-year-old that killed themselves? It's crazy.
Yeah, terrible. It's awful. It's awful. But I mean, again, that's what I'm saying. But that, you know, I mean, it's crazy. It's crazy. It's crazy to think the time that we're in right now as a society. So, I mean, unfortunately, with so much going on, we're still figuring out a way to normalize it. But there's just so much going on right now. And plus, we have an election in like 2 months.
How many people are unemployed right now, Jay? 40 million? Something? No, it can't be 40.
No, it's high. It's not 40 million. We're not that high yet. But I mean, here's the thing, though. I think it's close to like 15% or something. But the fact of the matter is that, you know, what do you think is going to happen when this, you know, we run out of this? Some people are still considered, you know, on furlough, which means they're still employed, right? So, I mean, that number is going to continue to get higher. It's going to continue to balloon as this uncertainty continues, because with no certainty, people aren't going to be hiring people.
Yes.
You know, and big corporations are going to be using this as an excuse, whether they're losing money or not, to cut for what they would call fat, right? And trim down and lean profits out. They do that in situations like this where they can. Nobody's hiring unless maybe you're Zoom, right? So, I mean, it's just not something you're seeing. You're seeing cutting back and rolling back. We continue rollbacks, you know, until there's some level of certainty. Even then, it's going to be tough because I think everybody understands we're not going to get back to January. And the one thing that I'm really concerned about, and I talked about this last week, the one thing I'm really concerned about is the market hasn't even started factoring in Biden potentially winning, right?
Correct.
You know, if Biden wins, you'll start to see the market price it in as we get closer if it becomes a reality. But I mean, when you start getting closer, that could really, really exacerbate a tough situation. Because, you know, obviously Trump is pro everything economy, right? I mean, yes. He would do anything.
He wants to win off it just being that the economy is better.
He's just pro economy everything, right?
Yes.
Roll back regulation, do just about everything he possibly can to keep the economy propped up. Excuse me. The Democratic side is total opposite of that. They're about the people, not about the economy, right?
Yes.
So you're dealing in a situation where they're gonna push up, you know, regulation. I know nobody's talked about this, but very real possibility one of their first courses of action is going to be to reverse the SALT deduction if the Democrats win, which is great, but then start to increase the personal income tax, which is going to help pay for the deficit, which means the people that are working and take less money home. I mean, you got some of this stuff. You start walking this down, you say, man, this could be, if he wins, this could be long.
But how about taxes going up too?
That's what I just said, the personal income tax.
The personal.
What I just said. I said that what happens is that ultimately they'll roll back the SALT deduction, which is effectively that, you know, Trump put in place in certain states where you can only write off up to $10,000 of your real estate taxes, right?
Yes.
Well, in most places in New York and Jersey and Connecticut and Los Angeles, you know, even places down here in Palm Beach, your taxes might be 70, 80, 90, 100 grand. You know, that's a dollar for dollar write-off too. So that means, you know, if you're in a 20 tax bracket and, you know, you're only able to write off $10,000 of $110,000 tax bill, that's, you know, it's an additional 25 grand you're paying out of your pocket. And I know people think that if somebody's got, you know, a lot of money, they're not counting that. They're counting that. Trust me. Trust me. That's why everybody moved from Stanford and Greenwich when this went into effect. That market completely obliterated for the last 2.5 years and finally started finding a footing because that SALT deduction is enormous. And I guarantee they immediately roll that back. The problem is what they're going to do to justify it is they're going to raise the personal income tax. And that personal income tax is going to be used to start paying down the deficit, however much of a deficit we've accumulated today. Because that's got to be paid for. These trillions and trillions of dollars of money that's coming from the Fed, where do you think that's coming from? I mean, that's not a gift.
Yeah. Wow.
And you can't wait to pay it back. It's got to be paid back. So that'll probably kick in if a Democrat wins. So I just think there's a lot of these things on the horizon that don't necessarily look. You don't have to be an expert in the stock market to understand it. We are at 10%, only 10% off of the highs in the indexes. That's insane, right? Yep. We are in a non-operable functioning economy that's at like 30% consumption right now collectively, right? But yet we're at 90% of where we're at the best point in our economy in January. I mean, that is such an inflated number. It's crazy, right?
Yes.
You'd have to build in so much positive speculation to believe that this is the proper area where they're valued at. Even if you're discounting, even if you're using Ford multipliers, even if you're doing all your numbers like I do, it's still such an insanely inflated number, right? Like broadly, it's largely not indicative of what's really going on. And there's going to come a time when that comes back to, you know, when the chickens come home to roost there. But I just think for right now, for the sake of, I mean, dire and what I'm talking about, it's just, this is stuff that goes through my head when I watch the market today, and you thought there'd be follow through from the weekend, you know, because a sell-off is good for the market, right? It's great for the market.
Yes.
It gives you buying opportunities. You know, we get the day like we got 2 weeks ago or 2.5 weeks ago where the market dropped $1,800 or 1,800 points in a day. Presents a bunch of buying opportunities, right? When you see that go up 600 points after a weekend when you know, half of the states in our country ticked up exponentially, and some of them are like in insane numbers. Something's not correlating, right? Doesn't make sense.
That's
and there's the justification. Well, less people are dying, so people aren't going to really care. They'll still go out and buy. I'm like, man, I mean, you want to put a pair of rose-colored lenses on. I mean, that is as rosy as it can get, right? That's your justification behind buying. That as long as the death rate goes down, people are going to feel more comfortable in leaving the house. I think you'd have to show that for a long time.
Well, they should have said that in the beginning to people who are elderly with, you know, underlying conditions, stay home. And the people.
They said everybody stay home. That's where we all stuck in the house for 4 months, right?
Correct. Yeah. I hear what you're saying. Yeah.
I hear what you're saying, though. But now they're saying though that it impacts young people too, though, right?
Yes.
So now it's not a pigeonhole situation anymore. Now it's a broad situation, right? And,
yes.
And that's kind of a to be determined, right? You know, I feel like this is such an evolving virus, right?
And it's all that we gotta wait. Like there's a whole bunch of waiting. So we waiting a month or two, see where it goes, because it's, you know, you gotta quarantine for 2 weeks, 3 weeks.
But here's the problem, though. the economy doesn't stop while we wait to try and find certainty. What you're describing is you're saying we got to wait to get certainty, right? Or that we find an element or a variable of certainty that we can build from, right?
Yes.
Whether it be, okay, young people are completely, they're not bothered by it at all, even though they test, they're asymptomatic, they don't, their stuff is much less, et cetera, right? But that takes time, and in that time, there's uncertainty, and during that uncertainty, people are scared, right?
Yes.
They just got out of the house, already scared, they want to go back in.
Correct.
And they're not spending money because they know that unemployment check is running out in July. So now they really need to start paying attention to it because things haven't improved like they were told it was going to improve. That's what I'm saying. Like when you start looking at this stuff and saying to yourself, when are we going to find that element of certainty, right? The only element of certainty that exists right now is the fact that the Fed is doing just about everything they possibly can to warn the market, and B, prop the market up. It's just, I don't know how much longer it's going to be able to hold.
When do you think we're going to begin to see if things are going to get better or not? You're still on the Thanksgiving date that we'll really see?
Let's just remember, when we had our first podcast about the coronavirus, that was in March, right?
Yeah.
And at that time, I had said that, we're probably not even going to start to see it until the end of this year because, and I didn't, obviously they've implemented a lot of things since then. The Fed keeps coming out with more money they're pumping into it. But I had said that I don't think we're going to really see opportunities to buy till the end of this year into early next year, right? As far as the real estate scenario, stock market is an everyday thing. You can find opportunities, right? But as far as that, now, as far as that's going to be largely indicative, though, of where exactly we can, what they keep propping up, right? Because there's going to come a day when they can't keep propping up, right?
Yeah.
There's going to come a day when you got to pay your mortgage. There's going to come a day when you got to pay your rent. There's going to come a day when the landlord can take you to court. There's going to come a day when you got to pay your cars and your credit cards.
Yes.
Because the banks still need to make money, right? You can't just, everybody can't just, I mean, I know it's a percentage of a broader base, but I mean, when you're not paying, they're not making money. And that's how banks make money. They earn interest. So this can't go on forever. As much as people want to hope, just because we're in a bad place, they're eventually going to have to pull the Band-Aid off. And that's, the answer to your question, I'm still sticking with the original thing that I said where I think, you'll start to see opportunities. But I think that it'll really start to exacerbate, once you see these Band-Aids come off, right? Once you see the Band-Aids come off, which could be the end of the summer, you'll start to see things change. It might take a month, but the minute you insert that mortgage payment back into the budget of that traditional household, it's lights out, man. It's lights out, especially if they're on unemployment, especially if their job's getting cut. The whole perspective changes.
But now people have a dilemma. Now people have a dilemma. Because normally when we do the credit repair and we look at business owners who come to us for credit repair, we see they let everything go personally. But now, because things were all good and dandy, that their business is doing good, and they'll pay their business expenses, taxes, everything better than they would their personal things that they got on their personal credit report. But now it's like, should I even open it? Should I even close? Should I let my business go to shit and my personal credit go to shit?
But I listen, I've had that conversation. A close friend of mine down here owns three restaurants on the island, right, on Palm Beach Island. And we were with him not that long ago, and he was sitting down, he was waiting on his PPP money. Now they do, and I've talked about it before, they do, I don't know, like $5-6 million a location, right?
Yeah.
And they're waiting on a thing from the PPP for a couple $1 million. It took forever, right? But he was like, listen, he goes, because we talked for like 3 hours. We were in the house one day. He's like, you get to the point where you're asking yourself, does this make sense? Because they can't even see how it looks on the other side. You understand what I mean?
Yeah.
Like when you're saying you have to social distance when you're eating at a restaurant, and the restaurant owner's saying, listen, on a good year we make 10%. We clear 10%, right? So if you're a $5 million restaurant, which is a very good restaurant, right? Doing a lot of volume, you're cleaning $500,000. That you then from there you pay the rent, your your employees. Hopefully you pay yourself.
Oof.
You
A
know,
lot of
and
people
then
don't even pay themselves, Jay.
What's that?
A lot of people, they don't even pay themselves.
But that's what I'm saying. Everybody, but it's not just that business though. Like the restaurant business is tough because it's just the you know, it's a closed and comfortable environment, right? You go in there, it's like, you know, it's cozy in a lot of places. You're doing it to chum up with people and relax. And literally what's going on right now is they're trying to extract that for the obvious reasons, right? You don't want people around other people. You're taking that out. You're removing the only things that allowed them to make money before: the drinking, the more tables, turning the tables over. I mean, I don't know how even the best restaurants. I don't know how the steakhouses. How if you're like at Del Frisco's, what are you doing? You don't even serve lunch. You just serve dinner indoors. So like, what in every major city in this country, right? So now you say to yourself, most of the cities are shut down because they've been protested to the ground. You can't eat in there. You can't serve drinks in there. You know, none of them do that.
They're gonna have to live off deliveries.
What's that?
They're gonna have to live off deliveries.
Yeah, but think about that though. I mean, just do the math on that. Del Frisco's probably. I mean, I know the one in Philly. The rent on that place is probably $600,000
a year. 600,000.
Yeah, at least $50,000 a month for sure. They're in a huge bank building. It's like 40,000 square feet. So I mean, you're talking about how many deliveries do you think they got to do to just meet their rent?
No, that's crazy. Wow.
That's what I'm saying. So it's not just them. I'm just giving you a small example. Think about all these other retail locations that are completely like relying on people walking into their locations. Like down here in Florida, I noticed this. They have outdoor malls, right? Like they got a lot of outdoor malls. Like, you know, they have restaurants because it's always sunny here, right? So it's always sunny here. So they have malls, high-end retailers and stuff. Huge malls, like they can walk down and go into the stores and stuff. They're all shut down.
Oh wow.
You know, you can't get into any of those places. Some of them you can. Some aren't even opening up. So like, how do you even get into the conversation? There's so many things that have to get fixed before you can even intelligently have that conversation. You know what I mean?
Yes.
And there's just such a mountain that's got to be climbed here. And if you think about, like I said before, think about hotels and resorts. The airline, American Airline, came out last week and said, we're not removing a middle seat. We're not doing anything additional. They're just going to wear masks. That's it. That's what we're going to do. And I said early on, I don't know how. They're another one that runs such tight margins like restaurants. They didn't have a chance. They don't have the ability to do that. They do that, they might as well go out of business because they don't have the ability to do this. And you say to yourself, how many people are comfortable just going in with a mask, sitting next to, like, rubbing elbows with some guy you know, who may not be running a temperature, but may be on the back end of this virus? I mean, how long is that going for?
Oh, no, you got to see the people in New York City. You know, these people in New York City live in their skyscrapers. They go down to the restaurant and the husband and the wife, they got the dog on the lap outside. They're both wearing masks and they lift up their mask to take a sip of their wine and then put it back down.
That's a very small percentage of a much broader issue, right? Correct. So, you know, again, there's always a trace amount of demand in any situation, and for any number of reasons, and that just sounds ridiculous, but I believe it, and I'm sure it's happening.
Yeah, no, you saw it on the news on Fox 5 in the morning. So that is the market. The market fluctuates fast. Real estate takes its time. And like John says, we won't really find out until Thanksgiving. I don't even know.
I think the reason why I'm trying to paint this in a broad scenario is so people know what to look for, right? Yeah. I'm trying to speak in a lot of depth so that you know what to look for in order to be able to identify either when things will turn or when things could turn in the other direction pretty hard, right? Because there's no element of certainty right now. The only certain thing that exists in our economy right now is the Federal Reserve, who has the ability to just print endless amounts of money, is at the table. You extract them from the situation, and we're in a much different economic climate right now. And we're not in a good economic climate. So, but I think if you know what to look for as a consumer, as an investor, anything like that, I think it makes it a lot easier to at least try and navigate accordingly, right? Because the stock market is a fickle monster, right? It is not to be toyed with. It's not easy, man. You know, it's not as much as you know. People try to talk like it's easy. Do it over the course of time. You know, it's you know, I run a fund. I've been running it now for a couple of years. It is not, you know, making returns is not, you know, I mean, especially right now when yield is everything. So you can't get yield from bonds. You can't get yield from money markets. You can't get yield from anything. Real estate is forget about it.
You think you're getting better as a trader at the moment?
Do I think I'm getting better as a trader? What was the last part?
At the moment, like when these downturns happen.
As a result of seeing all this stuff, you mean?
Yeah.
No, but I told you, I was through 2008. So, I mean, a lot of this stuff, it's the same. I don't want to say it's the same play because this is longer, but it's a similar scenario, just a different story, right? I mean, it's consumer confidence gets obliterated for whatever reason. In this case, it's the virus. Then it was foreclosures, a number of things that existed. And then it's a claw out from there. It's just then, what was different then to now is the fact that then it was focused on the banks and their liquidity, right? People weren't paying their mortgages. That's fine. Unemployment went down. That's fine. But I mean, when you bring the Fed into that kind of a situation, you have one issue in your banking system that needs to get held up, that can be controlled over time and over a sustainable period of time, right? It's a little different than dealing with something like we're dealing with right now, where nobody knows when this virus is going to run its course. No. I don't know how consumer sentiment changes. So to answer your question, yes, absolutely to answer the question, but you know, it's still a situation where you know, when you really know how to value assets and you're not just doing this blindly, you say to yourself, it's very difficult. I mean, it's trading at like 22. We're trading at like 22 times forward earnings right now. Right, which is, just to give you a point of reference, last year in January we were trading at 16. That's when the market was good. We're trading at 6. We're trading at 20 to 22 right now, and there's no revenues. The revenues like pale in comparison. So that's like, you know, I mean, that's like valuing a piece of property at 500,000 when the market was great, and when the market drops, you value it at 800,000 just because interest rates are at zero. Oh wow! Even if it's only worth, you know. Even though it's only worth less than probably 400,000 at that point. That's how inflated we are right now. So it's you got to be real careful. You know, I can't stress that enough. It's the only show in town, though. You know, it is the only show in town to make yield, though, in the market right now. So it's the only place where you can find opportunities to get yield. It's just, you got to be real careful. I mean, look, people can do whatever they want. They can be as reckless as they want, but in order to sustain in this, you know, you got to be careful. You got to hedge properly and do your math. You look at somebody brought up last week about Square, which I'm a huge fan of. Correct. You know, and you look at Square and the pit of March. The pit of March, I bought Square down at 33.5. Right, it's at 103 right now. Whoa. They had terrible earnings last month. Terrible, but they're at 103. Okay, so now they did get their bank charter, which I talked about last week. It's great, right? Somehow that took the stock up $15, which is justifiable. But you say to yourself, Square is the merchant for small business, right? Yes. Restaurants. Retail, for everything. Right? Yes. That's how they make their money, right? Is on the percentage of those stocks. The bulk of their income comes from that. Now they lend money a little bit. That's not the bulk of their very small percentage. Square Cash, again, still a very developing situation, which they're going to roll into the commercial bank. But you say to yourself, the bulk of their income got torched with their earnings, as it should, right? But the stock goes up 3,000% from the low in March. I mean, I sold it in the mid 60s. Because I'm like, all right, this is probably market value. And then you see, I mean, this is how much appetite there is. That's why I'm saying you just got to be careful. You know, there's just such an appetite because there's so much liquidity pouring in of smart money, dumb money, you know, fund flows and stuff. It's really difficult right now to safely position yourself. The one thing I'm counting on, though, is volatility, you know, so I've just been buying the VIX just because of the fact that that's one thing that you can count on right now when things are uncertain is volatility. And, you know, even with the market got back all the way at its to its highest point, the VIX was still at 30. In a calm market, the VIX is sitting at 10 or 15, right? So the fact that it's resting up in the 30s tells you that there's still a pretty significant element, people hedging themselves and are not completely comfortable, which is completely understandable. So we'll see.
I got a question. Danny says, I am in a bit of a financial issue and wanted to start making plans. My credit is gonna get wrecked, and my wife's too. 6 months of no work. Had to take a job making less to make my necessary payments for food and mortgage. Can we talk? Because I will have to get credit repaired. Trying to stay proactive here, if that makes sense.
So he's trying to get out in front of it before it gets to it. Yes, it makes complete sense. It's what a lot of people are doing right now. It's completely understandable. And in all seriousness, it's logical.
Correct.
I mean, if you know, this is kind of what we were talking about earlier. If you know in the next 4 or 5 months things are going to come due that you haven't been paying, you're not making nearly what you did before, then you know that a situation is going to get worse. Get out in front of it, map out. It's the proper way to do it. It's the proper way to do anything. Lack of preparation is the preparation to fail, right? So if you're preparing in advance, it's the right thing to do, especially in a situation like this, where there could be some issues you run into. So yeah, I mean, if you want us to take a look, we'd be happy to help you. We'd have to take a look at the report though, and go from there.
The thing about it is, you got these people who, of course, that they want to be proactive, but during the credit repair process, this could be kind of the customer who may get other negative items added at the same time on their credit file.
The idea would be that individual knows what the problem is, what they're not going to be able to afford. You understand what I mean?
Okay.
So, for instance, again, mortgage, autos, credit cards, etc. If you know coming out of the next couple months when these things come due that your income went down exponentially and you're not going to be able to pay them and you're just buying time now, a lot of people aren't facing it, but it's going to be a very real reality unless something readjusts in August, right? So if you make the move now to try and get them off before those late start to show, then you're kind of feathering out the exposure, right?
Yeah.
I mean, look, it's a way to prepare, right? It's not it's very possible that things could come up, like you said, collections from accounts that weren't paid, that were removed, that's possible. I mean, that's a possibility. But at least you're getting out in front of it, rather than sitting behind it and not preparing, which I think is what is happening in some areas right now. I think people are just kind of turning a blind eye and riding the wave right now that's coming in between the business liquidity and the unemployment liquidity, etc. So I think every person knows, or a lot of people know, once they take these training wheels off that the government's providing right now, I think a lot of people deep down know whether it's going to work or it's not,
Yeah.
And some people don't care to get out in front of it because they're just exhausted by this process, which I completely get. And some people are being strategic, which it sounded like the guy that just, Danny, that just asked you that question. And I think that's smart. I always think doing anything strategically is smart, though, right? Throwing your hands up and burying your head in the sand.
I
don't ever think that's the proper response. I'm not judging anybody that does. It's just that there's options and you have time to do it in advance. Why not give it a shot, right?
Okay, I got another cust of someone, John Montano on YouTube. Gizzy, I talked to you before. I have one open account, 1,800, a car, 2 bad accounts, very low amount. I was doing okay. Within 18 months, I have 3 30-day late. Can they be reversed and scores 550? Can they be reversed?
Can a 3 late?
Yeah, can 3 30-day late, can they be reversed?
What about all the other stuff you named before, though? Why would you just remove the 30-day lates?
No, he says he has one account and 1,800. A car, two bad accounts among very low amounts. I have doing okay. Yeah, he wrote the way that he wrote it is kind of all over the place. But we gave him a quote because I asked him if we gave him a quote. Yes, at the time my credit score was 0, December 2019. I bought a new car, no cosigner. I had 12 months straighted payments. Then things happen. Okay. All right.
Yeah, I mean,
Yeah, you just email us back and we'll give you a new quote. If we gave you a quote back in December, I mean, we're not gonna go by that price because it's more than 7 months now. So yeah, so just email us back, John. You have my email, GizzyCredit@GizzyCredit.com. Haniel Hayahoy, is day trading good? That's the Robinhood, right, Jay?
no, you can day trade with any broker. Day trading just means you're buying and selling within the context of the day, right? You're not carrying positions overnight. And I love one of the big problems that traders have coming into anything is they overtrade, right? And especially new traders that don't necessarily understand flows or why certain things happen or just normalcies that exist in the market. It can really confuse them getting in and out of positions when they shouldn't. Not mitigating risk. I mean, if you have experience, I mean, there's certainly people that day trade make a living out of it. I don't think day trading is. I mean, there's some positions you open up and it goes up a lot in the course of the day. You close it out because it met your return, what you were targeting. But I mean, I don't just limit myself personally to day trading. But I mean, I'm sure that there's people that make a good amount of money just strictly day trading. I just don't know if that would be the proper way to get into it if you're unfamiliar with it. I just don't. I think for anybody that's getting into it, this is kind of the public service announcement I was making earlier.
Okay.
It's if you're just getting into it, you should familiarize yourself with how these prices are arrived at, right? You know, forward multipliers, book value, things like that. Just so you can understand how values are even arrived at from these. You know, and how, because there is a technical element to it, and then there's an actual fundamental element to it. And there's multipliers attached to these values that get to the numbers, and there's technicals that run with it too. Technicals meaning the charts, where the charts signal that the price is going to go. So I definitely would advise everybody to just blindly go in and just start blindly trading, because I watched a video of somebody that had a good day. It's just such a fickle market, and we're dealing in unprecedented times of high volatility. I mean, there was a period last year where, and going into the previous week, we could just buy every dip. I mean, it just kept going up over the course of very short periods of time. So you didn't really need to understand really anything other than how to buy for a period of time. But for some reasons now, not for some reasons, because it's the only show in town right now, but now you're just seeing unprecedented amounts of liquidity come from all angles. And a lot of that's inexperienced money, right? And this is just not the time to be getting sharpening your knife in the market, or just cutting your teeth. It's just very dangerous time to, just for the record, as referenced by, you should see some of the most heavily traded stocks are like Hertz. Hertz is a bankrupt company, by the way. Hertz, the airlines are getting traded like so insanely right now. Why, I don't know. There's nothing changed about their situation. They're only being traded, or why you see so many people trading them, just because of the fact that there's a lot of volatility, because there's a lot of volume. So you see people trade these, you know that's not professionals. That's just people coming in and they're trading because they're using the volatility. And it's like, if you're coming in for that, you might as well just go to the casino.
Oh, wow.
Just go to the casino. I mean, seriously, you're just dragging out what's inevitably going to happen, right? I mean, I don't know anybody. Well, listen, I went on a tangent. To answer a question, you can definitely day trade, but I'll be very careful with it.
Okay.
If that's your sole purpose and your sole goal, and you don't have any experience or history doing that, that's all.
Okay. Then we have John also asks, are people making money on social media, e-commerce, Amazon, Facebook? I would think so. I mean, the Facebook Marketplace, there's always someone buying something that, I mean, I don't even know. I mean, if you're gonna sanitize whatever you're selling on the Facebook Marketplace, something that you bought and you're gonna sell it for, $30, or it's something that you bought 3 years ago at $50, but now you just want to get rid of it and you let it go for $25. I mean, yeah, I mean, you could definitely Amazon is very much making money. People love Amazon. Um, I get all our my lights, my cameras, um, microphones all through Amazon. I don't go anywhere special to get them.
Yeah, I mean, there's a reason why Amazon's trading where it's at. I mean, they haven't pulled back really at all throughout the entirety of this virus. So, I mean, there's a reason for that, because that's the one place where you can, other than certain, Walmart and Target and stuff, that's one place that people, when they're stuck at home, that's what they're using, and it's just nonstop. And yeah, as far as the Facebook platform and stuff you can do at home, sure, there's places making money, absolutely. I mean, Facebook just has a ton of people obviously back out of their ad platform, but there are marketplaces, and that's where people are choosing to buy right now. So there are areas of higher concentration as far as businesses that can make money in this market. Amazon happens to be positioned to make almost all their money from that kind of a market, right? They don't have retail locations you can go into, so this is ideal, this kind of a situation for them. But they're a small modicum of a much larger economy, right? They might be the most, other than maybe Apple, they might be the largest in terms of market cap that we have in this country, other than maybe Apple, like I said. But in the grand scheme of things, that doesn't represent our whole economy, though, I mean, it's definitely something people can lean towards if they need to figure out a way to make money. Opening up a business and Amazon and doing that, it's definitely an outlet to make money, but you'd have to figure that there's people that are rushing to that. Same people that were doing Ubers before as a side hustle are now on Amazon.
Yeah.
It's just how it is. It's the natural migration that you see. Before they were making X amount of dollars as a side job doing Uber. Now they can't, because not as many people are taking Uber. So now they go and they do it. They started their own business selling something on Amazon. It's just a hustle.
You said something about that Facebook people advertising. There's big businesses they're going to stop advertising on Facebook, and it's all because of what's going on with political correctness and all that stuff on Facebook. So I think North Face is not gonna be advertising.
Starbucks,
Unilever, yeah, Unilever is in New Jersey too. They're right up north over there by Englewood Cliffs.
You're talking about big companies. Coca-Cola said they're dialing it back. I mean, it was enormous amount of high Fortune 500 companies that said they're not going to be advertising. They're cutting back their advertising exponentially over the next 2 quarters. Now, look, that could just be, in all fairness, just like they use it as an opportunity to fire people when there's economic downturns, whether they're making money or not. This could just be an excuse for them to blame it on Facebook to dial, because we're in a cost-cutting environment, right?
Oh, okay, so, okay.
This could be them taking, this could be like a false flag. They're trying to make it seem like it's a political move, but in reality, they're just using it as an excuse, and it's a dual excuse at that point, right? They're trying to make it seem like they support all these things, and
yes.
But at the same time, it's their way of cutting a tremendous amount of ad budget that they had that may or may not be needed going into the near future. So you don't ever know, unfortunately, but it could probably be either one. I just find it odd that they all, at the same time, you see one do it and then they all start following. Where was this at 3 weeks ago, right? This has been going on for months.
Yes.
Years. So I just find the timing kind of unique.
John over there got the sniffles. You boosting your immune system, John?
Yeah, I'm good, man. Listen, I work 16 hours a day. I sleep like 7. All right, so I mean, when that's the way it works, sometimes you get run down a little bit.
We actually have some people over here that want to start referring business to us. Would like to chat sometime about credit. I'm not happy with the company I am working and I want to make a switch. So some of these people, they come from other credit repair companies, and they usually refer to other people so that the other person could do the other company could do the business while they get the customers. So they're looking
Right.
for like a kickback type of solution. But we're not too big on just getting all these customers, because we want to be fully in control of the customer and the credit repair process, and being in contact with the customer themselves, because
That's
this
the only
is
way. That's the only way the process works, man. It's the only way the process works, and that's through trial and error. If somebody tries to wedge their way in the middle to avoid the contact with the client, it doesn't ever work. Plus, there's no need. It wouldn't make any sense to do it that way. If somebody wants to pass this off a client,
yeah.
whether it be a realtor or a mortgage broker or just whatever, I'm fine with that. But I've been doing this far too long, and 100%, 100 times out of 100 times, whenever there was a liaison in the middle that felt like they needed to control the situation, it was a disaster. So, based upon those stellar numbers of 100%, we don't. That doesn't work for us. You can be grateful to get referrals, obviously, but we handle the client, we deal with the client, we communicate with the client, etc.
Correct.
And that's the only way it works, because we're huge on communication, right?
Or John, or they could purchase our professional do-yourself credit repair system.
Absolutely,
but there's a lot of people, John, who don't want to do the credit repair. That's the whole thing. They want to pass on the business and focus on other things.
Yeah, sure, but I mean, I don't look. I don't see a lot of we've seen that a lot before.
Yes.
Back in the day.
Yes.
A lot of people trying to wedge their way in the middle and act like they were the one doing it, and then they pass it off, and then it just lying and not being transparent doesn't ever work. Number one. Number two, I weed out at the door. What you said is right. Like we don't just take on anybody. I mean, I just don't. I've been doing this way too long, and this is a process. As far as getting people where they need to be, and the fact that we not only get people where they need to be, but we help carry, walk them through getting a house and achieving these goals. It's a process, man, and it's a process. You gotta be in conjunction with the client, And if somebody's already frustrated from the door, that's just a small example of what the process is going to be like. Is work your way through the process, and that's not good for us, and that's not good for the client. So, in situations like maybe with somebody else. But if for most people, which is 95% of the clients that come to us, we're happy to help, and we look forward to hit the goal, knock all those goals out, and hopefully if they're kind enough, refer us people that that they know we can help within their circle.
Correct. All right, Jay, we are hour 42 minutes. Any ending comments today?
No. I think the one thing that's good about it, if you go back to our, I don't know if people watch these in unison from one after the next, but I think the one thing that you can take from, if you did, is just the consistency with what we're trying to kind of get across. It's just, each time we talk a little more in depth about the economy, each more we talk a little more in depth about, issues that, I know we get off topics that are credit related, but they really aren't. They really, because the banks are part of every one of the conversations, even when we deviate from credit related stuff, specifically. And the banks obviously are the lifeblood of the economy and the credit side of things. So, hopefully this that we're giving as far as the education side is resonating with a lot of people that listen, and it's helping them understand things maybe they didn't necessarily understand before.
Okay. Also, my people, John, we are blessed. A lot of people start credit repair with us almost I think every day someone starts credit repair with us. And one of the places where we constantly stay busy is because people are looking at themselves and are saying, well, what's going to happen with my credit now that it's all crazy? Eventually these guidelines are going to get stricter. You're going to need better credit. They're already getting stricter. You're going to need better credit. So if you're looking for a credit repair quote, even if you over here, someone asks us how much is the professional credit repair system, It's $2,000 for the system. If you want to get into it, you could get into it, but don't just get into it thinking you're gonna make a lot of money. Because yes, this business you could make a lot of money, but it's not really so much about making a lot of money. It's really so much about taking a stand for the customer, taking them from this goal that they never thought they had that they could accomplishing that goal, taking them to another goal, taking them to another goal. Like Glenn Byers just said right now, patience is key. So you got to have patience for that customer. That customer may add, last week when we talked about, we had a couple of people in the mortgage process. We had a customer that almost every month he added a collection account on his credit file. And on top of that, the customer was complaining that why wasn't he done yet after 12 months? Which
Well,
is
this is why I said that, that this is why it's important. Look, I'm grateful for every client that
correct.
we get, truly. But this is why it's important to be able to have a level of communication with that client, right? Because it's a very important part. We're huge on communication. It's the only way you're going to get the client to where they need to be. It's the only way you're going to get them, not only through the credit process, but through the house buying process, the auto buying, etc. Right? It's the only way it's going to work is through communication. You abstract the communication from the process. It's not a process anymore, right? I mean, it's just not how we prefer to do it. And I think that a lot of times, most of the clients that come through us, they learn a lot while we're even cleaning, which is good, but we like to do these podcasts for people that aren't even clients too, right? Who don't have us as service providers, but they still need knowledge and education on what it is that certain things in the economy they don't necessarily understand, and maybe they get a better understanding of. So we're going to keep doing these because, obviously it provides more transparency for us as individuals and as a company, but more specifically as
the referrals too, Jay. The referrals are getting a lot easier.
Right.
People referring us.
Yeah, but I mean, it's from people that they're seeing what I mean, when you tell somebody you can get them into a house, you get them into a house, and you do what you say in a business where the percentages of that happening are very small. Yeah. Obviously, you stand apart, right? When you tell them you're going to get them a house and refi their car and get them some cards, and every one of them happens, and you haven't disappointed them in any capacity and exceeded the expectation. Well, that's I'm grateful for every referral, but that normally equates to some degree of referral, right? When you're able to walk it like you talk it, and I think we take pride in being able to walk it like we talk it.
That's right. That's right. Especially staying so long making these videos, because the whole process of us making these videos, and by the way, tomorrow 7 a.m. I'm coming up with a new credit repair results videos for those of you who don't follow our Instagram, GizzyCredit, at GizzyCredit on Instagram. I got some new credit repair results to share on YouTube. So be on the lookout for that. I do commentary at the same time. When I play the video, I do commentary of what's happening with that customer. If that customer is in the mortgage process or not, or bought a car or got new credit cards. Okay. My sister started 60. Oh, Ernest Dobson. My sister started 60 days ago and her Equifax is clear. You guys are the real deal. Boom. There you go. Now, that doesn't mean that all three bureaus are going to get done. That just means that Equifax is done, right? And then she may have some opportunities to go and get some type of Equifax lending, credit card or vehicle loan. We're still working on Experian. We're still going to work on TransUnion until everything is removed. Is that correct?
Of course. Of course. I mean, we work until we're done. That's the motto, right? I mean, we work until we're done.
Correct.
And whether that takes us 15 seconds or that takes us 6 months, I mean, that's why I said the communication element is of utmost importance, right? And I think the one thing that clients that deal with us realize very early going is that communication is important to us, right? So you'll normally, if you write an email, typically speaking, if it's within a reasonable hour, you'll get a response back in a couple of minutes. I don't think you could talk quicker than I respond to a lot of these emails. So we probably have quicker conversations through email than we could have if we were sitting in the same room.
That is very true.
Just understand that, that's a huge part of what we like to have because of the commitment on both sides. As long as the clients communicate properly, responding properly, do what we need to do, and we're there to communicate with the client. They need support, right? They have questions, concerns, they need clarification, etc. So it's a two-way street. That's why it's so important to be able to communicate with the client.
Yes, and if you are thinking about getting into credit repair business, you gotta definitely be committed to that customer and take a stand for that customer. Let them know things are gonna happen. Just be patient. Just like Glenn Bide said. You know what I'm saying? So, anyways, Jay, thank you so much. I, for one, I'm gonna go have a drink and I'm gonna practice social distancing. Today's my birthday, so I am gonna go out for a drink with my mask on. John be sleeping. All right. So John, thank you so much again. Everybody clap for John. Again, hold on. Stephen Chatavong. I appreciate you guys. Keep up the good work. Thank you, Stephen. Appreciate you. Okay, John. Thank you so much. I'll see you. Take care. So yeah, mi gente, happy birthday. Yeah, man. I'm gonna go what is it? Somewhere here, like 10 minutes away, Clifton, in New Jersey. Shannon Rose, my friends invited me for a drink, so I'm gonna go have a drink. But practice social distancing. Practice, someone kind of look crazy out there and kind of coughs and sneeze. Stay your distance. So what else? Listen, tomorrow I have a new video coming out. Credit repair results. Again, if you don't follow my Instagram, which I know a lot of you just like the YouTube and following on Facebook, Instagram, YouTube, Tumblr, Twitter. Listen, it gets too much. I know, but so that's why I'm making those videos, doing my commentary on those people who we come through for. And I have a lot more credit repair results videos every week. I'm going to either Monday come up with a new credit repair results video. On top of that, do a podcast, or the next day I'll come up with the video. I just want to say thank you. On my body of this text, if you guys want to support this channel, you can support us by starting credit repair with us, or you can also support us if we want to get better equipment. If you want a better experience in watching us, support my channel. I have my Cash App, and I have my what is it, PayPal as well. You can donate money to your boy, and you can buy me some coffee. Anyways, mi gente, thank you so much. Favorite people's song is coming up right now, and let's go. Gizzy credit. Birthday. Anything you want, then you can get. Hey. Don't be scammed, cause then you'll regret it. Thank you, Glenn. Gizzy credit. Hey. Anything you want, then you can get it. Don't be scammed, cause then you'll regret it. Oh. You no longer gotta look pathetic. Gizzy credit. Hey. Anything you want, then you can get it. If you don't have my Instagram, at GizzyCredit on Instagram. Where is it at? Too much light. There you go. At GizzyCredit on Instagram. Hey. Thank you. Hey. Hey. Oh. 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 Don't be scammed. What you need is just a change of plans. And time is money, you know, get that cash. Birthday Flow, what's good with y'all? Podcast, YouTube, Facebook, live, every Monday, 6 p.m. You guys already know. Bendiciones. See ya later. See ya later. Oh. Bendiciones. Take care.